All right, I am going to bring in a friend of the show, Grayson Rose.
I'm excited to be here because I've got it's sort of funny that you're introducing me so that I can introduce someone else. But this is such a big deal that we wanted to do something special. I am here really just absolutely thrilled to be introducing Milan. Milan, this has been a long time coming, but for those of you who don't know, we are starting to make a big push into India. We are expanding beyond the US and Canada, which have traditionally sort of been our largest markets. For those of you who subscribe to any of our real-time data packages, you'll know that we have US and Canada, but we've also recently added UK and India. We are trying to expand the markets that we serve, and India is one of the first ones that we wanted to expand into. We just think that this is absolutely for any investors that are actually trading India stocks. They are underserved by most of the software platforms, the charting packages and everything that are out there right now. And we want to be a part of the solution to that. We think that India is just an absolutely growing market, and we're excited to serve them better. And Milan is sort of our boots on the ground over there. And he has been doing a fantastic job in the last few months, kickstarting the Analyzing India blog and focusing on bringing some commentary to stock charts that's India specific, that's focused on that market for traders and investors in Indian stocks. So Milan, we as stock charts, representing stock charts, we are just thrilled to have you. It's truly a pleasure, and we're so excited about all the stuff that you're going to be doing to help sort of bring more attention to the Indian markets and sharing your technical insights and everything like that. So I'm here today to introduce Milan, and I am absolutely thrilled to see what he has in store for us today on the show. So Milan, hopefully you're still on the line there. I know we're
yes, I'm very much on the line, Grayson.
Great.
Good afternoon, all of you. How are you all?
I am doing great. Yeah, welcome to the show, Milan. Always a pleasure. I know Grayson's talked a lot about having you on as somebody who can communicate a lot of what's going on over in the Indian market, and so welcome to the show.
Thank you so much. It really feels great to be here. Thank you. So, good afternoon, everyone there. Just to give you a brief, it really, before I say anything about myself, I must thank all of you for inviting me here, and it really feels great to be among you all. So, just before we begin, I think it would be great if I give you a brief overview of who we are and what we do. We are a independent technical research firm, and we are based in India with the name Gemstone Equity Research and Advisory Services. And we have our primary focus on the Indian markets. Our main job involves advising clients through investment and trading strategies, and conducting customized portfolio research for them. And in the process, obviously, we do provide actionable trade ideas, and along with in-depth market insights for the Indian markets. We have our technical newsletter, a daily and weekly one, which is presently in its 16th year of publication. So let me try and now come back to the purpose as to why we are here right now. Actually, I have been a user of stockcharts.com for over a couple of years now. And with regard to contributing on StockChart, it has been a couple of months that we are building up some India-focused research on the newly set up blog, Analyzing India. So this blog is set up sometime in October 2018 with the name Analyzing India. So just on the top right-hand side of the blog articles page, if you scroll down, the first blog you'll find would be Analyzing India. And there we have created some good actionable content since October 2018. So if I speak with regard to the purpose of setting up this blog, we intend to create a content which is directly usable which is directly actionable and consumable by the stockcharts.com users. On this blog, we intend to provide weekly technical outlook, or technical notes on different sectors in focus from time to time, different technical, some stock specific individual stock ideas, and some which offer good investment and trading potential. So before we move ahead, I would request all of you to take note of this URL and probably bookmark that so that you can visit us again on this platform. So this is the URL, stockcharts.com/articles/India. I would again request to bookmark this for the written visit. So moving ahead, I think before we start discussing the markets and discuss different stocks and sectors that we have, let me give you a brief idea that what I'm going to talk about. We would be discussing the state of Indian markets as of today, where are all different sectors placed as of today, and what can we look in coming weeks. So at least in the next quarter. So I think before we move on to discuss any of the Indian charts or to discuss Indian markets, I think it would make some sense if we know the research methodology that we follow here. And following that standard process, the content that we would be putting up on the Analyzing India blog. So moving on to the research methodology, primarily we follow a top-down approach. So by saying a top-down approach, we begin deploying relative rotation graphs to identify the sectors which are rotating favorably. Once we do that, the sectors are shortlisted, and once the sectors are shortlisted, again the components of those sectors are benchmarked against the shortlisted sectors, and finally we create a shortlisted stocks. And while doing so, later on we put primary reliance on relative strength, momentum, and different sentiment indicators. So now let's move ahead and let us have a larger look at the Indian markets. I believe you all are seeing the screen. Both of these are weekly Nifty charts, but on your left is a long-term 10-year Nifty charts, and on the right is slightly the zoomed-in version, which shows the movement over last 3 years. So let us have a look at the broader structure. Let us try and understand the broader structure of the Nifty. So we are currently looking at this chart, which is a 10-year Nifty chart, weekly chart. If we see that the Nifty is primarily in a very structured, firm uptrend for over last 10 years, beginning in early 2009 and until today, that is 2019, more or less it has been in a secular uptrend. In last 5 years, the uptrend has been so unanimous. I would say that it was hardly 2 times that the Indian VIX, the volatility index, spiked about 20. There were only 2 instances that you can see here, sometime in 2015 and sometime in early 2016. These were the only 2 instances that VIX spiked about 20 levels. Furthermore, as can be seen here, Nifty has, except for some occasional breach for 2 times, one sometime again in 2012 and sometime here in 2016, Nifty has remained about its 200-week moving average for all these 10 years. And during this previous 10 years, RSI, as you can see here, has hardly dropped below the oversold area. It has, practically never got oversold. So we can fairly conclude that except for 1 year in 2011 and 1 year in 2015, the markets have overall been a very structured and secular uptrend. All the downsides that we see, that we saw, were within the. But as of now, if we zoom in and move to the chart on the right of the screen, we see that of late certain structural breaches have occurred. So if we see from 2016 until end of 2018, markets were in a upward rising channel. That this channel lasted for around 30 to 32 months. But it was sometime in October, on the week ending 5th of October, that this upward rising channel was broken on the downside. Markets took support around, just near 10,000 mark. And it has been now flirting around the 50 DMA for over 15 weeks. So a brief convection zone is something that the markets have created over past 14 weeks. So that is nearly just about a quarter. So in coming days, with the channel being broken, it would be very important for the Nifty to either get back inside the channel again, or at least remain comfortable above its key moving averages. Otherwise, if this 50-week moving average is breached on the downside, then we might be in for some unpleasant development on the charts. Though we are just in the middle of the week, and this bar is not yet fully complete, but we are still up 1.74% as of the session ending today on Wednesday. So the question is, obvious question is that how should we approach Indian markets over coming weeks? So if we speaking broadly, Nifty's behavior against 50-week moving average will remain important over coming weeks and quarters. And as I just said, that any slip below that will invite some unpleasant formations of the chart. More importantly, as it happens every once at least 5 years, even in stable political environment, we have general elections here. So general elections are sure to leave both investors and traders alike to deal with a lot of volatility. In coming year, we have elections over next 2 months. So next 2 months are going to be very volatile months for the markets. And all up moves in 2019 will require us to keep a very close eye on the market breadth. Market breadth has been suffering of late. And previous up moves, we have been seeing those up moves with a fractured breadth. So market breadth will be something that we will need to keep a very close watch on, I must say. So overall, my feeling is that the coming year, the rest of the year 2019, is going to be a very stock specific and let's put it that way, it's going to be a stock pickers year. It would be important to pick the right stock, and it won't happen. See, in India, Indian markets were in a trend over last several years. So that trend, I think we have now entered some intermediate trend. The primary trend has got interrupted sometime in the beginning of October, and the remaining the markets will now oscillate better back and forth in a very broad range. So it's going to be a stock pickers market going on from here, and one will have to remain highly stock and sector specific rather than giving any blind chase to the momentum. So now that we are speaking about market breadth, I think market breadth basically gets derived from a broader index. So here we speak about CNX 500, that is Nifty 500, as it is very commonly said. Just as an overview of this index, this CNX 500 index, it represents nearly 95% of the free float market cap of all the securities listed on the National Stock Exchange. So long as this index is not performing, it is quite a matter of common sense that market breadth will not be seen. So let us have a look at this index now. Again, both the charts you see are that of CNX 500 index. The one on the facing left-hand side of the screen is the daily chart, and the one on the right, sorry, is the weekly charts. This is the weekly and this is the daily chart. Now, if we have a look at the daily chart, if you see that this index, when benchmark, it formed a double top near 9,900 and 10,000 mark, and since then it has remained in a very sharp declining trend for the next between September and October, and it was only in end of October and beginning November that it tried to find some base. And in the meantime, we see that the RS line, when benchmarked against Nifty 50 index, has been in a multi-month downtrend. It is attempting to breach the 50 its 50 DMA and attempting to reverse its turn, but has not yet confirmed itself. As we see in this circled area, the prices today have attempted to move past the 50 DMA mark, which is 9028. It has ended a notch above that at 9230, and we might see some follow-up moves there. If we take a broader view and go to the weekly charts, the one on the right, we see that this same zone, that is 9,200 and 9,250, is where the 50-week moving average lies. Somewhere here, it may not be seen so clearly, but it has this index has been flirting with it since the end of 2018 and has not yet moved past in a convincing manner. And to the extent that this 50-week moving average has almost become a proxy trend line for the markets. We see stochastics making lower tops, but the relative strength, the RS line, when compared against Nifty, it's still falling, and it hasn't shown any kind of major reversal in the trend, or has not yet even got near to its 50-week MA, which would otherwise act as a confirmation of any change of trend. So, in a nutshell, for the market breadth to improve and for us to see a wider participation, or rather any sustainable up moves in Nifty and markets in general, it would be important for this index to perform well. And for this, moving past and sustaining above its 50-week MA of around 9,205 as of today would be very important. If that happens, then we can see this index moving back somewhere near 10,000 mark again. But for that, it would require good amount of participation of the components and improvement in its relative performance as against markets in general and against Nifty in particular. With that, we have a broader view on the markets. Now let us try and see what sectors and what stocks would be worth watching for in the coming weeks. So, as I just mentioned that our chart methodology, our research methodology begins with scanning the sectors by deploying the relative rotation graph and shortlisting them. So, again, we are in the middle of the week, so this final plots might vary a little, but not much. So, if you it gets too much understood to plot all the sectors here. So we have I've created 3 different charts with different sectors, and all are benchmarked against the broader CNX 500 index. So here, if we see that many of the smaller indices, for example, CNX mid cap, CNX consumption, then FMCG, infrastructure, Nifty Junior, Nifty Next 50, which is called Nifty Mid Cap, financial services, that is CNX FIN, CNX Auto to a larger extent. They are all moving southwards while being placed in different quadrants. So irrespective of where they are placed, they are all losing on the momentum front, and we don't see any uh, major performance either by index in general or any stocks in particular in coming weeks. On the other hand, there are certain good indexes which are showing good improvement in either some new improvement in the momentum, or they are continuing ahead eh, with nice vigor and push. So let us have a look on them first. Despite the fact that PSE, by the way, PSE is Public Sector Enterprises, the PSE index and the pharma index, despite being in the lagging quadrant, they are moving northwards very sharply, and this denotes improvement in the momentum. And we can expect some good performance though from these two groups over coming weeks. Similar improvement in the momentum is seen in the metal pack as well. So the metal pack accompanied with pharma and PSE are expected to now consolidate their performance in the coming weeks. Now let us have a look at what is anyway leading the markets as of now. We see that energy index is making excellent progress with very good amount of momentum. As you can see, the gap between the two dots, I mean, each dot denotes a week. So CNX energy is expected to lead the markets. Along with that, we see another broader index, CNX 100, also slowly crawling into the leading segment, leading quadrant. Along with that, we have IT, which is expected to do well. So, to sum up, in my opinion, the best 5 sectors that would be worth keeping an eye, which would be worth keeping an eye on, would be Nifty Energy, IT, PS Index, Pharma, and Services sector. So let us now break down our discussion from sectors to stocks. So, having said this, let us try and focus on few of the stocks which would be interesting to watch for in coming days. Let us pick up with IT sector. These are the components of the IT pack, IT index, plotted on RRG with CNX IT index as its benchmark. So we see that there are certain couple of good stocks which are likely to be in the uptrend over coming days. That would be NIIT Tech, Infosys, then Tech Mahindra. We see that after entering the weakening quadrant, it has suddenly reversed its momentum and it's now heading back into the leading quadrant. Along with that, we'll have some good improvement in relative momentum with HCL Technologies here and on the TCS. The rest of the components like Mindtree and OFSS, that is Oracle Financial and Software Services, Wipro, etc., are not likely to put up any spectacular show. So out of this pack, there is one chart that invites my attention is Tata LXI. Though it is seen, drifting lower in the lagging quadrant, but individually speaking, it is likely to show some good momentum over coming week. The one on the left is the Tata LXI chart. It's a weekly charts. It's a weekly chart, and there are a couple of signals that have emerged which show that there might be a potential change in its trend. As evident from the chart, the prices have penetrated above 200-week moving average here, as it is seen inside this circle. And the more important and more fundamental, or rather stronger indication that has emerged is that a very solid bullish divergence over the RSI. It is observed that the stock had been drifting downward and had been, marking levels lower. But during the same 4 months, RSI never made any lower low. In fact, it maintained its bottoms and it's now seen inching higher. So this bullish divergence was an enough evidence which would suggest a possible formation of a bottom in this stock. Going beyond this, it can be seen that the on-balance volume remained sideways while the stock declined. So we can consider this that a lower number of stocks participated in the declines, and in a way, it acts as a positive sign whenever we speak about the reversal or the potential reversal, I would say. So that being said, another sector which was worth looking at was energy pack. These are the different different components of the energy index plotted on the RRG, and we have used CNX energy as its benchmark. So we see that couple of stocks are showing either good continued momentum on the upside, and couple of them are seeing improving a lot on the momentum front. For example, we have Reliance Industries here in the leading quadrant. We have BPCL in the leading quadrant, but it is drifting lower, and it's likely that it might consolidate at current levels. We have IOC, that is Indian Oil Corporation, moving towards entering the leading quadrant. We have ONGC here, which is showing a sharp improvement in the relative momentum, despite remaining in the lagging quadrant. So again, if we the IT index per se remains in the leading quadrant when it is benchmarked against the broader CNX 500. So among this, if we just try and shortlist a couple of stocks which would be worth keeping an eye on, would be Reliance Industries, ONGC, GAIL, IOC, that is Indian Oil, NTPC, and BPCL. Out of this, there would be one chart which would be worth keeping an eye on from the energy pack would be Reliance. The energy pack remains in a firm uptrend when compared against Nifty 500, and within that, Reliance also remains in the leading quadrant when it is benchmarked against the CNX Energy Index. Now we have Reliance weekly charts on the left-hand side of the screen, and it is quite evident that it is in a very firm secular uptrend. Secular uptrend since 2017. So we expect this stock within this pack to outperform the remaining components. The third sector that I would like to take a favorable view on would be FMCG. Here we go. Here we again see the FMCG components plotted against FMCG index, and here the place is a little crowded here, but still we have a couple of good names that can give us good returns. We see Jubilant Foodworks here remaining in the leading quadrant. We have Imami Limited, which is sharply improving its relative momentum, and perhaps this stock is looking for a major trend reversal. We'll look at this chart as we move ahead. Some good opportunities will be seen in ITC. As seen here, it is again, these are all the components which are looking at improvement in their momentum. We have PGH, that is Procter and Gamble. It remains in the leading quadrant and continues to inch higher while improving its relative momentum. So again, if we try and shortlist a couple of stocks which would be rewarding to keep an eye on in the coming weeks, would be these. ITC, these are not in order of preference. These are just the 5 stocks which I feel are worth watching for in this Nifty FMCG index. They are ITC, Jubilant Foodworks, then we have Godrej Industries, Imami Limited, and Colgate-Palmolive India.
That was very, very enlightening, Milan. It has certainly been a pleasure having you on here, Milan, and I hope that you'll come back and join us again real soon.
Yeah, it was my pleasure, Tom. Thank you so much.
Oh, you're very welcome. Very welcome indeed.